Interest rates are dropping. I think I'll wait to buy.
Go ahead if you want to pay more.
Moving forward with the Dekker Team. Moving forward together with the Dekker Team.
We are honored that for over 35 years, we've been able to come alongside you, not only selling, buying, and investing in real estate over 3,117 times, coming alongside you to build your finances, build your faith, build your fun, build your fitness, and even strengthen, heal, and flourish inside relationship. We're going to discover some stuff.
Mm-hmm.
Who is it that is wise to buy now? We've talked about who should wait. Mm-hmm. We've talked about who ought to sell now.
Mm-hmm.
And so there's a little bit of crossover.
Yeah.
And even with these turbulent times,
Mm-hmm.
right, whether it's fluctuations in interest rates, whether it is the whole inflation conversation, whether it's global trauma, tragedies, whether it's any of the stuff that is ailing us.
Well, to me, that's the time to buy. When there's economic uncertainty, economic downturn, it's the time to buy real estate. Now, you might think I'm crazy because people say, well, the prices might be going down. But hear me out.
Hear him out?
Hear me out.
Okay, hear Ken out. Did you hear him say it?
Yeah.
Hear him out. Okay,
Well,
so
we just-
that means if you already turned him off,
Tune back in.
Tune back in.
Turn up the volume. Pull over to the side of the road. You want to listen to this. Interest rates have just come down last week.
Right.
By a little bit.
0.25%. And 0.25% the month before.
Right. So now a half. They're projecting another 1 to 1.5 in the next 18 months, okay, of rate decrease as long as the economy continues to sputter and whatever. So the sputtering economy is what's causing interest rates to go down. Now, when interest rates go down, what happens to affordability?
Well, prices go up.
Yeah, why? Because houses are more affordable.
Right, exactly.
The payment's less. So housing prices go up. And I'll make a little projection here.
Oh,
I think
you
we're
know how
gonna
much
be,
I don't like the projections. I know you've been like
right
at the
a lot.
forefront. You are. And you're at the forefront of understanding the real estate industry, like sitting, you were standing, you were flying, you were doing all that stuff to run the Ottawa Real Estate Board as president. You didn't run it all by yourself. You have a
the CEO
large
did
staff.
that.
The CEO did that. And you did have the ability to be at the forefront, sitting on Canadian task forces for real estate, provincial task forces, as well as president of the real estate board. Yep. And now currently in your role as past president, you have had the privilege of seeing things and listening to economists and people that are in the throes of the impact of all of these global and local things. Yep. In relation to real estate. Right. So I actually think you have some wisdom.
Thanks.
I still scares me when you do projections.
Because I don't have a crystal ball, right?
Right.
I do not know woo-hoo here. And I know that the factors, if the interest rates do come down that much, the factor is prices of homes were up during COVID at a certain level, right?
In 22.
And those prices did not come down until interest rates started climbing. That's the only reason prices went down, was because they significantly increased interest rates. So if interest rates are now coming down, I believe in the 18 months that are coming up till the end of 2025, we will hit COVID pricing again. We'll be back to the same level.
That's
my projection.
Okay.
We'll see. Yeah, hold me to it. Hold me to it. Hold my feet to the fire. It's just a projection. I'm not a prophet. I'm not a prophet. You can't kill me if I'm wrong. Okay.
So who should buy?
That's a great question. I think anybody that is, first of all, if it's your first time, try and get in. Trying it in, as long as it's not going to like stress you out. But if it's going to stretch you a little, you might have to adjust your lifestyle for a while. That's okay. If you need to ask mom and dad, the bank of mom and dad, hey, could you help us a little bit to get started? That's okay.
That's
right?
great,
Swallow
actually.
the pride a little bit. Let's get the family rowing the oars all in the same direction, right? Let's help each other build wealth.
Well, because we still need somewhere to live. So the reality is we are building wealth regardless of whether it's for us or for someone else.
Yeah, and at the
Can you just
upcoming
let that-
workshop, yeah, but just let me get there. At the upcoming workshop on September 25th, one of the things I'm going to teach we're going to teach, is the ability for a homeowner who's a parent to help their kids get a house and build their retirement at the same time. So you don't want to miss that.
You don't want to miss that.
No.
Definitely don't miss that. And when else? We want to buy, if we're going to be developing, that's our D word. Remember, we're sticking with the D theme. If you're going to develop wealth, net worth from a financial perspective, and that could be as an investment property, as long as the numbers work. So, I mean, here's the bottom line.
Hey.
Don't buy it if we put it into our proprietary spreadsheet that Ryan designed, right?
Yeah.
Ryan Dekker, that shows it's a bad financial decision. Don't do it. But as an investor, we're not, hopefully, as emotionally attached. Now, our first-time investors often get a little emotionally attached.
Yeah.
And yet we're looking at the numbers. So if the facts are telling you good news, then do it now.
Yeah.
If the numbers don't work, then wait.
Yeah, and if you think the interest rates are going down, lock in for a shorter period or go variable. If the numbers work variable, then lock in a year. It's, you know that when the rates come down, investment properties look more attractive, so their pricing goes up.
Right.
Now, move-up buyers, they should be looking at it now, because if you have a condo or a townhouse or whatever, and let's say it's $500,000 or $600,000, and you want to buy an $800,000-$900,000, when those two properties go up, if the whole market goes up 5%, which one increased more in dollars?
Well, the higher price property.
Yeah. So you want to buy it now,
right?
Not when the rates are low.
And you want to buy if you actually need the space. Like if it's causing conflict or distress in your own life to live in the space that you're in because you can't figure out how to make it work with the amount of space given the number of people. Right? Because there's been too many diapers go through your home, too many babies born, then you would not want to wait. You would do it before you create additional stress in your life that could be avoided if you made a move.
Yeah. So I personally think for many, many people, and it might be you, it's the right time. You may not even have considered it because of all the stuff going on in the world, but it might be the perfect time. How would they find that out?
Well, I think what they should do, if you're thinking this has made you consider, maybe this is for me, then, well, a move might be in the cards for me. Or whether it's buying an investment property or an actual move, then what you'd want to do is call who?
Call me. 613-867-6058.
And who is me?
Me is Ken Dekker. 613-867-6058. Did I get that right? Yes. 867-6058. And we're thrilled that you joined us on Life's Inside Track, because when we move forward together, we've got this.
Moving forward with the